yeah, we got the CPI print coming on Thursday.
Okay.
So that's big news.
And the CPI print is...
Consumer Price Index tracks the price of a basket of goods that consumers pay for on a monthly basis, and how those prices fluctuate month to month, year over year. So that print comes on Thursday, the print for January. People are expecting a pretty hot number. Inflation is obviously kind of the boogeyman of the markets right now. It's the scariest thing. And it could derail what has been a nice rebound in stocks.
Okay.
Stocks started off the year freaking out because of the Fed and inflation and all that stuff. Then they stabilized and it rebounded a bit over the past couple weeks because of earnings. Earnings have been really good.
Earnings have been good, yeah.
Except for Facebook. Microsoft, Apple, Alphabet, Snap, Pinterest, a lot of these companies reported fantastic earnings. So earnings have been really good, provided a bit of a rally here, a relief rally in stocks. The CPI print on Thursday is a risk to the rally because you could get a really hot inflation print. You could get Fed members coming out and saying, we need to hike 50 basis points in March. We need to go super fast, super aggressive. So it could be it is a risk to the downside. Do we think it's going to materialize in an actual sell-off? No, because we think markets are pretty much priced for a red hot print. And it doesn't matter what inflation was in January. It matters what inflation is going to be in March, in April, in May. Because the Fed's already dead set on hiking in March. That's like 99.9999999% chance that we're going to hike in March.
So it shouldn't be a surprise.
No one cares about inflation. It's not going to change the course of Fed policy. Fed policy is hiking in March. Fed policy in May is not going to be determined by the January CPI. It's going to be determined by the April CPI, by the May CPI, by the June CPI, right? And so what matters more is not exactly what happens in the January inflation print, but rather what happens in the prints after the Fed actually hikes. And so that's why we think the market may brush this one off, but CPI prints are going to become increasingly important as the Fed actually gets into its rate hike cycle.
Now and May.
Exactly. Yeah, those March, April, May prints are going to be very critical for the market. Very critical.
And so what happens if those numbers are, again, keep going up?
If inflation does not cool off, and the Fed responds, the Fed will respond by hiking aggressively, the market's going to crash.
Okay.
The stock market, everything is going to crash. It's going to be pretty ugly.
And then, what is your recommendation to somebody who has money in the market right now, especially maybe in those tech stocks that we were talking about earlier? They have the money in these companies that have had successful earnings, interest keeps going up, and then everything crashes. What does the outlook look like at that point?
Well, I think that what you have to understand is that you're supposed to be investing for a long-term horizon.
Which, again, is something that we talk about all the time here.
A little crash here in 2022 could be really healthy for your portfolio.
Okay.
Crashes happen.
Yeah.
And the worst thing you can do is sell into crashes.
Gotcha.
That's the worst thing you can absolutely do. The best thing you can do is buy into crashes. If you don't have any liquidity, then you just sit through the crash.
Yep.
So long as you own high-quality companies that are going to grow their earnings over the long term, you're going to make money. Don't worry about timing it.
Gotcha.
They always say it's not about timing the market, it's about time in the market.
Okay.
So if there's a 10%, 15% drop on the horizon, take it on the chin.
Okay.
Because what's going to happen is that the Fed will sing a different tune. Well, first off, our base case is for inflation to cool off.
Okay.
Like, we think there is a very strong likelihood.
I'm presenting worst case scenario.
Over 90% likelihood that inflation cools down meaningfully and rapidly in 2022.
Okay.
And that in response to that cooling inflation, the Fed is going to pivot from being, we're going to hike a lot, to we'll hike very slowly and gradually. And that markets are going to be just fine and stocks are going to head higher. Now, in the worst case scenario that you said, that inflation doesn't cool off and the Fed does start to hike rates really aggressively, stocks will drop dramatically, probably down to 20%, maybe a bear market. Now, if we get to that point, the Fed's going to also sing a different tune because the Fed, Powell doesn't like to be the bad guy. So if stocks are crashing and the economy's not looking good, then he is going to pull back on that, maybe let inflation stay hot, and try to regain the confidence of the markets. So I think that either way you slice it, things are going to be okay. Okay. But you have to brace for the fact that there is a I would say a 10% likelihood that you do get a much deeper correction in stocks. But again, you don't sell into that. Nobody can time the market perfectly. You just weather through the crisis.